Morning, Market Chameleons and Dmitry. Welcome to another morning show. How are you doing, buddy?
Good morning, Will. Good morning, everybody. Thanks for joining us. I was just kind of right before the show reading some of the interesting comments in the chat. So about GEO. So maybe we'll take a look at that one really quickly. But before we get started, as usual, let's just go through the disclaimer.
All right.
All right. So will everybody keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your registered investment advisor or call your broker. They should be able to help you answer any questions or provide you with guidance. There's this disclaimer.
All right.
That will get started. And I did see some people talking about the GEO.
Yeah, I think it's a REIT, and I think judging from Jake's on the chat this morning, which is always nice, and he's saying sounds like it's a prison operator. So
yeah, so that there's a lot of controversy around that, right? Because these are like for-profit prisons, basically. So it's a different type of REIT where they just run a prison and they charge the government to hold detainees, and that's the business. I remember they started taking off at one point, thinking like, there's going to be more people going to prison, and now they're coming down. But I think the question was about this yield. And the interesting thing, with REITs, they, by regulation, everybody files the same type of statements with the SEC, that are basically like a standardized filing. But I think that with the REITs, they don't really, you have to go out there and like kind of back things out to analyze them. I don't know if anybody's out there that does that, because the way REITs do it is they have a lot of assets, they have a lot of depreciation. So all this goes into the way their earnings are reported. So like the traditional GAAP accounting doesn't really, and a lot of stocks, I think banks as well. So it's hard, it's a little bit more difficult to analyze. You got to kind of go in there and know what you're doing there. But the question was if this dividend is sustainable. And like from just my experience, whenever you see that, it's kind of a warning sign. People don't like to give away money on Wall Street. So when you see a big yield like that, probably something is wrong, right? It's probably not sustainable. And I just looked really quickly at the key ratios here, and I see like a payout ratio of 156%. So that could be just a warning sign right there. And I see sustainable growth minus 8.3%. So there could be issues there, to go in there and kind of investigate it further to figure out if this is a good, at this price, if it's a good risk reward ratio. But I would say, that when you start seeing this, 17%, 18%, something is going to happen. Probably something going forward is going to happen. There'll be like a cut or whatever. But that was really quickly on that GEO. It's interesting, a lot of people don't even know we have prisons that are privately owned prisons, and they basically get paid by the government to hold prisoners.
Yeah, Jake has made two interesting comments back to back on the chat. One is CoreCivic, I guess that's our main competitor in this space, that's also a REIT, is actually changed in their makeup to become just a publicly traded company. And
okay.
So they're moving from a REIT to just a straight equity.
Okay.
And he also says for REITs, you need to look at adjusted funds from operations, not the CFO, which is interesting.
Yeah, funds. Yeah, exactly. Like that it's a different way of analyzing them than like from a traditional stock. And there are a lot of stocks out there with their own nuances that you have to start backing out. So you can't really compare like, GEO to Facebook using that GAAP or what are the standard accounting that's accepted. on those SEC filings. You have to massage those numbers a little bit. Anyway, so that was with GEO. That's the only one that kind of stood out. I don't remember if there's any other ones out there, but if there are, let me know. We could go over them. So today, what I was going to do is take a look at what's going on in the pre-market hours. We had a question I didn't get to yesterday about dividend plays, so maybe we'll take a look at that today. We'll look at an unusual option volume. I don't see anything really on the earnings front. We're kind of like, in this period where there's not a lot of earnings coming out. So we'll do look at a couple different other things, since there's not much on that earnings front. So this is the pre-market report. And basically these are stocks that are trading in the pre-market hours. We got the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to use these filters here just to see what's going on in the higher market cap stocks. So I'm just going to put 20 billion or more. And I see, 12 made it on the gainers list, 16 on the decliners. I'm not seeing like really big movers here, and I do see like Tesla up 2%, but we've been seeing that almost every day now in the pre-market hours. One here is like Roku, which was a standout. I think it like ran up to 200. Now it's coming back in. Nothing like that's jumping out at me right now, glaring, not, they're kind of within like a smaller range. So let's take a look at the unfiltered report. One that popped up on top, CBAT, that's a low cap market stock, up 153% on 20 million shares trading in a pre-market hours. SGBX, that's up 108%, trading 8 million shares in a pre-market hours. There's some news on these. So I'm just gonna, as usual, I'm just gonna take the top one as an example to look at what's going on in the pre-market hours. We'll take a look from the price action analysis and kind of move on to the different reports. So CBAT, right here, I'm clicking on it, and this is what it looks like in the pre-market hours. This is the pre-market chart up here, what it's doing. So we see it closed at $1.35 yesterday, and that was interesting. So it was up 53% yesterday, and now it's trading $3.44 in a pre-market hour, so up another 154% from yesterday's close. And it's in electrical equipment and parts. So I think we actually mentioned this yesterday, that they could be a benefactor, that there's some regulations changing, right, in like California, maybe some states where they want to get into more clean energy type, clean energy.
Well, they actually want to ban the combustible engine.
Right.
You're not going to be able to sell cars that operate off a combustible engine. So therefore, no gasoline, only electric by 2035.
Okay, so
that's 15 years out.
15 years out that they might just that's in that state, right? Just the state alone.
Which is, I think, and Jake will probably correct me if I'm wrong, I think it's 11% of the auto market in the U.S. is from California.
Yeah, and California's got they're in the United States, I think they have like one of the highest pollutions, one of the biggest polluters. Of course, they have a big economy, a big population, but in the U.S. they're like probably one of the, one as a state, one of the biggest polluters in the United States. So maybe now they're taking some action there. That could be a benefactor from it, but there is some news here. I'll let you guys take a look at it and see if that move in that stock is warranted. But this is what so far we see the summary statistics trading $3.44 in the pre-market hours. Pre-market VWAP $3.33. The range in a pre-market $2.03, $4.16. 20 million, almost 21 million shares trading hands in a pre-market. That's compared to a float of 28.9 million. So on a relative basis, that's a lot of shares trading hands for this stock. It's a very low cap stock, 88 million market cap, and very liquid. But let's take a look at what this stock, the history of large gap moves to the upside in this stock and what tended to happen after the opening. So CBAT, here we go. This is the last 3 years, the 12 largest opening gap moves in CBAT. And these are the dates. So we see yesterday it had a big gap in the morning. So these are the dates. These are the opening gap moves over here. So we see the average of the 12 largest, 20%. Today, like a 154%. So I don't see anything that high yet. Like 41% is the high over here on November 30th, 2018, in the last 3 years. This is what it tended to do after the opening. So it looks like the average move from the open to the high was 14.3%. We see here that's 67% from the opening. 67% of the time it moved higher. That we see here that 33%. So these zeros, they're saying that that opening price was the high of the day, moved lower from that opening price. So that's what this from the open to the high. From the open to the low, the average move was 11.8%. So we see a little bit more skewed to the high side than to the low. And it looks like from the open to the close of the day, almost 50-50, half the time it went up, almost half the time it went down. Look, one time it was unchanged. Average move 2.3%. So that's what it looks like, from a historical return distribution after a big opening gap move to the upside. Yesterday, though, we see it opened up 27% and added another 20% after the open. So that's what happened yesterday. Again, this could be a benefactor of that news. And we see here, this is the range, 36 cents to $1.95, 52-week range, trading $3.44 right now in the pre-market hour. So that's that stock really quickly. If you don't have any questions on the pre-market specifically, well, maybe I'll take a look at the unusual option, and then I'm going to go to that dividend question that I got previously through an email.
Very cool. Let's move.
Okay, so the unusual option volume, just take a look what's been happening yesterday. So these are unusual option volumes report from yesterday. We're not open today. Yesterday's close. I'm going to sort this by just largest notional by call volume. So in dollar terms, largest notional. So I see Tesla yesterday that traded 2 times its average daily option volume, 1.4 million shares versus 748. 1.1 billion of that traded in the calls versus $800 million in the puts. Zoom, that yesterday was down 7%. It looks like that traded 2.6 times its average daily option volume. Looks like $200 million in the calls, $200 million in the puts trading hands. And the implied volatility in both of these were down yesterday. Cusco, did that report earnings yesterday? Yeah, I think that reported earnings yesterday. It was up 0.7%, $58 million worth of calls trading hands, $24 million worth of puts. That traded 4.9 times its average daily option volume. Of course, that was earnings related. NKLA traded 1.9 times its average daily option volume. That stock was down another 9.7%. So that stock has been hurting after that news about the CEO, right, stepping down.
Yep.
In $18.6 million worth of calls trading hands, $90 million worth of puts trading hands there. Implied volatility is still pretty high, 83rd percentile rank, but yesterday it was unchanged. So that's really quickly just on the top unusual option line. Let's see what's
just so every chameleon knows. NKLA, there's a great piece in the Chameleon forum that Jake, Dr. Chameleon, wrote, which is a must read. I'll put a link out there. But and any questions we don't get to today or that you ever have, make sure you put them into the forum. It helps all chameleons.
Yep. So besides that, I just went over kind of top of the list, the biggest movers. I don't know what this GE is. It's like a penny stock. I think somebody mentioned it, and I saw in the chat. Just Energy, but yesterday it made, on the option volume, traded 80 times its average daily option volume. So you see 50,000 contracts for 623, but this is like a penny stock, 56 cents. And I think it might have even been on the, let me see, in the pre-market, like up 18%. I have no idea, really, we don't really look at these penny stocks, but that made that top of the list. And then see Owens up yesterday, 47%. That also traded 11.7 times its average daily option volume. Is this a REIT? Oh my, let me see what they do. No, oh, medical, healthcare. So this is in the healthcare. So there was some news on it, but that's up. That was up a lot yesterday. 47%. Looks like implied vol was up. Option, a lot of option volume. $2.4 million worth of calls. Trading hands 1.1 million versus of puts trading hands. So those are the ones that are like just the top upside movers on the unusual option volume report yesterday. I also just took a look really quickly. If you guys are interested, and this is one thing up here, I don't know if people use these tabs, so I'll just show you. But if you look at a news scanner here, you could just really quickly just say, show me what's, I'm going to switch to pre-market movers. So you see here, I'm moving into pre-market movers, show me like bullish movers. And then I could just sort, you could just sort like this by highest movers. So these are, and then you could get the news stories or press releases right next to them. So this, bearish movers, you could switch to bullish movers. You could look at your, in your watch list. So if you have stocks you're following, just choose your watch list. This is a quick way to just sort out what's moving and kind of get the news right next to it. So that's one way to use the news scanner. I'm just going to take a look because, I know the market has been selling off a little bit, and for whatever reason, to me, it felt like it was being led by the technologies. Technologies have been, kind of giving some back. But I looked at and this is my watch list, the sector ETFs, and in the last 2 weeks, I'm just going to sort like, I know that SPY is down 2.7% in the last 2 weeks, but the biggest, percentage losers was the energy sector, financial sector. Energy sector down 5.7%, financial sector down 4.7%, the REITs down 4%. So, technology is down 2%, but not getting hit as hard as, you could see here. This is down almost 3 times as much as the technology sector.
I mean, it's amazing that energy sector just keeps going down and down and down. It never really rallied.
Yeah, I don't know. Yeah, it's like really bad. Financial sector also now, on a 1 year basis, it's down 14%. Look at technology up 41%. This energy down 43%. You got financial sector 14%, REITs down 10%. So they've been really hurting here in the energy sector. Let me just, let's take a look. I'm just curious to see which stocks in that. Let's take a look at that energy sector. I'm just curious what stocks in the last year.
To give you so XLE's trading lower than it did at the depth of the financial crisis in 2008.
Wow. So yeah, this and you could see some of these Occidental Petroleum, Noble Energy, Apache, EOG, like a lot, Schlumberger, in there. Look at these percentage losses in a year. Like they've been getting cut in half. They definitely didn't participate in this snapback in the market. Let's just go like right now. If there's no specific questions, I'll go to the dividends report and try to answer that question.
Great.
Yeah, so let's do that. And the question was this. Right now there's not a lot of earnings. What about a dividend play? Either you capture a dividend, or how did the stocks tend to behave around ex-dividends, because ex-dividends, people follow them. Are there stock run-ups going into the ex-dividend date? Are you better off like buying before, holding it, getting the dividend? How long does it take to recover? So these are like kind of type of questions that I was getting. So I'm just going to start out here from a screener, and then we're going to go find one and analyze it further. So I'm going to go to like the event-driven screener, and this is going to look at, I'm going to filter out by event and see how the stocks behaved around the event. So here, this event type, here, I'm going to pick ex-dividend dates. So this is the event type that we're right now analyzing. I'm going to say show me at least 12 observations, and I want to see stocks that increased around this event, like at least 70% of the time. And let's take for now, I'm going to just say that they had to have a positive average return and a positive median return. Let's do that. And let's also say that the next time frame to start, something coming up in the next 5 business days. So if there's an opportunity, it should be within the next 5 business days. So let's see what it filtered out. So I got here, so ABM, AGG. So you could see here that around ex-dividend dates, what is this stock? Agilent Technologies. So that's going to expect it to go ex-dividend October 5th. And 75% of the time, 2 weeks before its ex-dividend date, the stock tended to increase into that ex-dividend date for an average return of 1.2%, median return of 0.3%. This is the best return, 6.1% historically. Worst return in that period, 0.8%. Standard deviation 2, and this is the Sharpe ratio of 0.62. So this is how it tended to look historically going into that ex-dividend date. Again, you still want to go, I'm just going to ignore everything else and let you guys take a look at anything different going on in these stocks. If they're in a downtrend, if there's some kind of news on it, if you think that it should be lower, you got to take that into consideration. I'm just starting out, as a starting point, just looking at the historically how it behaved. We could take so this one, if you're going to mimic this hold period, the next open date would be September 30th, close date October 2nd to hold that same period. This one up 1.2%. Here's another AGG. Let me see what this stock is. Okay, so that's an ETF. Okay, so that's a bond ETF. That's one to look at. So some of these might be ETFs. AMAT, American Tower. Let's take a look at American Tower. We talked about this stock, right? Well, this is a REIT that deals with cellular towers, right? So they could benefit. So let's take a look at this AMAT right here. I see 92% of the time, if you did it till 1 day after closing price, it was up 92% of the time, average return 0.9%, median return 0.8%, best return in those 12 observations 3.1%, worst 1.8%. The next period to open September 25th to September 28th. So I'm going to take this AMAT as an example, American Towers, or should I do this A?
No, do American Towers. By the way, for those who care, most of its towers it owns are overseas, which is kind of interesting. 40,000 towers in the U.S. and then like 75,000 in India, 20,000 in Brazil.
Oh wow, yeah. So and it's a $104 billion market cap stock, and we saw how the REITs were not right. The financial REITs did not do that well as a whole group, but I think this one. Let me just make sure, but I'm pretty sure that they, in the coronavirus, they might have done even better because more people are working from home using those services. So over here in the last 6 months, it was up 25%, not as good as the SPY, the market as a whole, but we see here it's been weakening. right? So you got to take that into consideration. Weaker than the rest of the market. Maybe not the best candidate to do it, but I'm just going to go through the analysis from historical perspective. Obviously, you want to do and make sure it checks off on the rest of your checklist. But they didn't. I don't think that they did as bad as the rest of the REITs. So let's take a look at. I'm going to take a look at AMAT here from a price action analysis tool. So this is what we're going to do. I'm going to put AMT. Okay, I'm gonna analyze it around a catalyst event. So we're gonna put ex-dividend dates. Okay, so AMT around catalyst event, ex-dividend dates, and let's say starting, I don't know, 10 days before, ending 10 days after the ex-dividend. Okay, and let's use 4 years of data. So this is what we're gonna do. So 4 years of data. So if we just started 10 days before, 10 days after, it's 50-50, 50% of the time it was up, 50% it was down, 1.5 average return, 1.5%, median return 0.46. So at least from 10 days before, 10 days after, we see here that this is what it looked like day to day. The high point here, 2 days after, kind of started coming back in. Let me see the low point 10 days before. So let's do 10 days before, 2 days after. So that's kind of the high point historically, 2 days after. So if I change that from starting 10 days before, 2 days after, that improved the profit. So 63% of the time that holding period was positive, 38% it was negative. Here's like how it looked like year by year. And we see average return 2.35%, median return 1.18. Again, this is taken into consideration since you're buying before and selling after the ex-dividend date, it includes the dividend inside your return, right? Because you would hold the stock, you would also receive the dividend, so your total return would be, whatever the stock plus the dividend. We see here a big move to the upside, 15.3% one time, to the downside, negative 4.4%. But we do see median return 1.18%. So that's just if you're looking around dividends and trying to capture and figure out, does the stock after the ex-dividend date, does it go all the way down, and whatever dividend you get, do you lose it anyway in the stock price? Does it tend to drift, not give all of it back? So some people play that, and some people do even spreads around there or put options around ex-dividend dates. So that's one way just to look at it from a historical perspective, how much of it holds. So that's really quickly one example. Let's take a look at, what was the other one? A?
Yeah.
Let's take a look at A, catalyst. I'll do the same thing. I'm going to start out 10 days around. The last 4 years, so we see buying it 10 days before, holding it 10 days after ex-dividend, 56% of the time it was up, 44% it was lower. Average return 1.1%, median return 0.55. This is what it looked like year to year. So we see here the low point here. So 2 days before would have been the best time to buy. 9 days after, so you see it 2 days before, and then after ex-dividend just kind of kept floating higher and higher and higher. So let's just see how that looks. So starting 2 days before, what did I say?
10 days after, I think.
Okay, like 9 days after, something like that. Let's do 8 days after. So let's see this hold period, 10-day hold period. So if we narrowed it down, 63% of the time it went up, 38% it was down. Average return 2.4%, median return 3.6%. Here's a large move, 11.4%, big down move, -5%. So this is the return distributions around the ex-dividend dates. This is how it tended to do in the last 4 years, take a look at what's going on in the stock. Maybe something is different. This is just looking at the historical data as guidance. Of course, you still want to see what the news is, run your checklist on the stocks if you want to do them or not. But that's really quickly some examples of looking around ex-dividend dates, returns around ex-dividend dates. And these are some of the questions I've been getting in emails, so I wanted to go over it and show a quick analysis. We're running up against the bell wheel. Are there any questions?
Well, I don't know if you can take a quick look at gold, GLD.
Okay.
I know the metals, gold and silver, are to sell off. We had a couple questions and a back and forth at the beginning about gold. So
Yep.
maybe show a trade card if there's a trade card, if someone wants.
Yeah. So let's just take a look at the gold, like what it's been doing lately. So we see that, it's been around in 1 year. It outperformed actually the S&P, right? In the last 6 months, then it started to underperform, up 14% in the last 6 months versus the market, overall market up 34%. 3 months, it's kind of in line. It looks like, like a little bit choppy versus the market. But let's take a look at, are they looking at it from a bullish or bearish perspective?
Well, they were wondering why it's going down. So I'm thinking they're more bullish in the commentary.
More bullish. Okay.
Yeah.
And let me just take a look at here's one thing we could look at. Let's see how the options flow. So here I see, like, in the last 30 days, there's $14 million worth of bullish call buying versus $5 million versus bearish put buying. So these are just looking at straight, single-legged trades on the ask side. So that's in the last 30 days. We see this kind of cooling off in on average in the last 5 days. So we see, compared to 14 million in the last 5 days, $9.9 million worth of bullish call buying versus $6 million worth of bearish put buying. So it's reversing a little bit. Yesterday, we see $7.6 million versus a bullish call buying versus 5.7 bearish put buying. So that enthusiasm has been cooling, as you see from option flow perspective. Let's take a look at if you're looking at a rebound, right? If you're looking at I'm going to look at one more thing, actually. Let's just look at this, the risk premium. Let's just see, the volume. This is the volume here in puts trading that's 20% out of the money. So we see about $18,000 worth of puts yesterday trading that are 20% out of the money or more, like a crash put. That's compared to 46,000 on average, 20-day average. So that's not that big. On a correction side, though, $664,000 worth of correction puts that are 10% to 20% out of the money versus 477 on average. Let's take a look at the summary here. If we take a look at trade ideas, if you're looking at like maybe a rebound or short-term rebound, let's look at some bull put spreads. So here we have some bull put spreads that's looking at the October 23rd, selling the 174 put, buying the 169 put. That's a credit of $1.52. We think based on historical returns, we think it's worth on average 102. That gives you 14.4% theoretical edge with a historical win rate 75%. Here's a dollar put spread September 30th. So is coming up. Expiration, selling the 172 put, buying the 171 put, 16-cent credit. We think it's worth theoretically 7 cents. That's a 10.8% edge with 92% win rate.
Awesome job, Dima. Listen, the bell just went off. You got some gold in, which is good for everyone. Thanks so much for joining everyone. Remember, if you're new, subscribe to the YouTube channel. It's a big deal. Everyone, please give us a thumbs up if you can. Thanks, Dima. Great show, buddy.
Thanks, everybody. Have a great trading day. Hope to see you guys next week, right? Have a great weekend.
Yeah, we'll see you on Monday. Have a safe trading day, everybody. Bye.